All right, Matt Gougé, Get Better Everyday Podcast. I got my good buddy Jim Kiniris today, Northwestern Mutual. Excited to talk about financial planning. As a mortgage broker, I'm talking to people about finances all day, every day, probably similar to some of the conversations you're having. So let's jump into it. Tell people who you are, how you got into financial advising, and we'll start there.
So got into financial advising. I was a finance major at Sac State, and I knew I wanted to be in finance because I'm a son of an immigrant. And so being the oldest son of a Greek family, dad tells you, hey, I buy Snickers for this much and I sell them for this much. And that's how we keep the lights on in our deli. And I got to be, 8 years old learning that lesson. And so, I always liked money. And I like to joke that I was a 5'3" nerd in high school. So instead of dating, I was collecting baseball cards. And baseball cards, basketball cards, and football cards are a lot like stocks.
Yeah.
You buy them for this price and you sell them for this price. And so it was kind of a natural progression. I've always been good at math, and then, got into Sac State as a business major and a concentration in finance.
Awesome, man. I love it. Yeah, I resonate with a lot of that stuff, just liking numbers, and I know how great you are with people. So I'm sure, part of it was like, I like numbers, I like people. There's this finance thing I can give a go. What are some misconceptions people have about financial advisors? Because I think, I don't know what the percentages are of how many people use a financial advisor, but those that don't or haven't spoke with one or haven't put together a plan, they've probably got misconceptions. What are some of the things that you see that people just don't understand?
So a great book that I like to talk about is Morgan Housel's The Psychology of Money. I think I got that right. Psychology of Money by Morgan Housel. It's probably the best book about financial anything. And what it talks about is how someone like my father, who can be independently wealthy with a 6th grade education because he plays it conservative, he stays in his lanes. And then there's other people that fancy themselves very intelligent, that take some risks they shouldn't take, or they're a know-it-all. And next thing you know, they're still, wondering how they're going to retire. I think the one misconception I would tell you is that people believe it's too expensive, right? Or that it's only for rich people. And I would tell you that everybody has financial insecurities. My father is worth a lot of money, and he's still freaked out about every dollar, every dollar. I mean, he's going to leave generations very well in my family, and he's still freaked out about is it enough?
Yeah.
Right. And so a lot of it is, it's a behavior game more than anything else.
Right. Yeah. I think that's what, some people don't get. And from my perspective as a mortgage broker, I was talking to somebody yesterday. There's people that make $40,000 a year who live paycheck to paycheck. Mm-hmm. There's people that make $400,000 a year that live paycheck to paycheck, and it's the same thing.
You mean the mortgage group of 07?
I'm just saying, it's an inflow outflow game,
right,
where if you create a plan and you save X percent, it doesn't matter how much you're making if you're spending it all, or you're spending more than you make. So how should somebody who's maybe a beginner, doesn't understand how it all works, how would you tell them to start?
Think of a financial planner or a financial advisor like a doctor, right? Tell them what your pain points are. Tell him or her what your pain points are, right? Tell them, what goals you have personally, professionally, and financially. That makes our life easier, right? If you don't plan on leaving your kids a bunch of money, let us know. If you plan on leaving your kids a bunch of money, let us know. If you're very concerned because you're like me and you have a father that has long-term care issues, and you want to make sure that's taken care of for yourself so that your kids aren't burdened with you, let us know. I mean, we want to know, when people sit in front of us, this relationship is useless unless I do exactly what is important to the person in front of me, right? Essentially, we're therapists. Remember that meme that was on Facebook that said what people think we do and what we really do?
Right.
So us as financial advisors, we don't sit and look at a Chiron all day long and look at
16 screens and day trading.
I listen to a lot of financial planning podcasts, and there's actually financial planners who go back to school, not to get their CFP, although they do that too. They go back to school to get their therapist license.
Wow.
Because that's just as important when dealing with people's money issues, because it is a psychological game. And so, I want to know that the person in front of me is being taken care of to what's important to them and what they're trying to accomplish. Otherwise, we don't have a good relationship.
Right. Yeah. And I think you said it, and it's a planning game. It's a psychological game.
Mm-hmm.
I look at it similar to, somebody can go to the gym and get fit on their own.
Mm-hmm.
They got a much higher likelihood of getting fit if
Right.
they've got a trainer. who's
Right.
holding them
Right.
accountable, showing them the right things to do. And so, as a financial advisor, what are some things that you guys are doing, to help people, have a higher chance of success than they would if they just, on my own, I'm going to invest in index funds or whatever.
Let me
Someone
go
might.
back to that point
Yeah.
real quick. You just made a great point, right? Uh, Out of 100 people, there is 10 people we can't save because they'll get in their own way. Because behaviorally, there's something psychological that's making them spend every dollar they make. There's 10 people like my father who just plays it safe, and he'll walk away from a table before he loses too much, right? So we're not gonna. My dad's not wealthy because he had a financial advisor. He's wealthy because he just saved $9 out of every 10.
Mm-hmm.
It's the 80 people that we can really help. And really, if someone is disciplined enough to go to the gym, in your example, all we're doing is telling them how to make it just a bit better. But it's those edges. It's that 1% more of compounding interest that makes a big difference over 40 years,
Right.
right? And we're not talking about retirement till age 60, right? If people are living longer, you might get to age 60 and want to be financially independent. And what do you do for the next 25 years for money?
Right.
Because no more money's coming in. Are you worried you have to go back and get a job at Walmart? Are you worried that you have to, do something that you don't want to do because you need to make ends meet? And so going back to my analogy of seeing a financial advisor like you would see your doctor, you might be absolutely healthy. You might come to us and we do a financial plan for us and say, you're on track. You're doing great. All those little decisions you made, playing it safe and diligently saving, you're fine. But let's check what happens next year.
Right.
Because what happens next year may not be something that we did or that they did. It might be a bad market. It might be a 2008. Well, did that set you back? And how far did that set you back? Do we wait for the market to kind of come back? And then we do. We go into the education game and the psychology game.
Okay.
So we would think of it in terms of, like you said, a personal trainer would get you and I shredded, but we already take the time to get ourselves fit.
Right. Yeah. I can show up there 5 days a week and, do decent, but with the trainer, probably, be on the front of Men's Fitness or something. Who knows?
For sure, you and I.
I'm interested too, for people that are listening to this, it's 2024. There's uncertainty. People don't know, what's going to happen with an election coming up, with the economy. The economy seems to be doing good on paper for people's personal, finances. Inflation's a problem. I talk to people more now than ever about, budget problems in their households. So what's the play in 2024, 2025 and beyond, for people that, feel stretched? I feel like that is a more common conversation now than ever before. People feel stretched.
Yeah, I think we're all feeling it, right? It's belt tightening time,
Yeah.
right? And so whereas the 04 years, especially when I was working with loan officers in your industry, I mean, you're making $600-700 a year. You go to all the trips to Hawaii you possibly can, right? And then in 2024, you go to 0 trips to Hawaii, which is fair, right? I mean, you wouldn't
Took
spend,
one.
right? Go one. Right. But I think that yes, we are all feeling the pinch of the economy and inflation. And if you're on a fixed budget, then you just have to do some belt tightening, right? Maybe don't cave in to the peer pressure of having to buy things that you don't need, right? Maybe make dinner at home more, right? I mean, I've always been good about that just because I want to stay healthy, and the food out, if you eat out, it's not good.
Mhm.
And so that might be one of the things you need to do is just kind of think about your financial situation and think about ways that you're spending what you don't need to, right? Make coffee at home, all the things. But also, it might be time to kind of look at what you're doing to make money, right? You could be in the wrong position financially because of the career choice you made. Maybe now's the time to pivot.
Right. Yeah.
Yeah.
I mean, I think in general, easier said than done, but it's like, you'll be better off if you make more and you spend less.
Right.
People understand that, but I think that, personal financial advice helps somebody who, just like mortgage advice, somebody comes to me
Mhm.
and I can't just know what the best advice for that person is
Right.
without getting the details, because everybody is unique.
Right.
Everybody's different goals. And so, for somebody who may be listening, and thinking about this, and they're like, you know what, I'm 35, married, just had my first kid. Maybe I should, start thinking about this stuff, think
Mhm.
about the future. what what are they going to do as a first step to get started with, financial planning? And are there tools that you have for that budget
Mhm.
side, the spending side too?
Yeah. So good news. So on that, couple, you touched on things that just got my brain going. Plus, I'm caffeinated. Uh, but so our financial planning software has a budgeting tool, right? It has an itemization. Is that the right word?
I think so.
Itemized
Yeah.
list of where they're spending money. And just like if you're going to start cutting, we're going to go back to diet and exercise and all the stuff. Just like if I get on MyFitnessPal and I start entering in the times that I go to the candy jar, it's going to start to add up, right? So when the client that's 35 having their first kid, wanting to buy a house, et cetera, comes to us, well, first of all, it's a great opportunity for this person, their spouse, to discuss what are our goals as a family. I mean, that's how you stay married, right? You have shared goals and shared future, shared optimism, shared hope. They sit down with us and we talk about things like that. What does 10 years look like? What does 15 years look like? What does 20 years look like? Is college important to you to fund for your children? Are you like me where the kids turned out not to be college people, right? Let's let's establish a relationship. Let's see if I can help. And then let me see if I can earn the right to work with you on an ongoing basis to measure this stuff with you so that we do the little things here for now for a 30. You know that a person when they're 35 has different life goals at 45 and at 55 where I'm nearing, right? Life looks way different 20 years later.
Mm-hmm.
And so for the young couple, it's a great conversation, a great opportunity for them to come to us, discuss what's important to them, their goals, what they see their future as. And then we have those little tools to kind of help them through that.
Right. Yeah.
And then once they see that, they go, sorry to cut you off. Once they see that, they see, oh, well, maybe we don't need to go to the movies 4 times a month.
Right. Right.
I haven't gone to the movies in forever. What does it cost to take your family to the movies now?
A lot, probably. Yeah. I haven't
100?
been in a long time, but yeah, it's probably $15 a ticket or something. And popcorn's probably $12. Yeah, I think I've only been once in the last year. But yeah, that's great. Cause once you set a goal and you are on track, that other stuff you see as impediment to the goal versus like no plan at all, no goals at all, spend, look up at 40, be like, oh my gosh, I've got zero net worth. And one day I want to stop on this hamster wheel that is, the 9 to 5 for a lot of people. And so what about people that are super, I think, excited, aggressive? In my business, I'm talking to a lot of people who are investing aggressively. And their thing is like, I want to be work optional by age 50, age 40. For the financial advising piece of it, I know because I've talked to people who just want some balance. They want some real estate. They want, some invested in a relatively stable, type of diversified asset. What kind of maybe even examples of things that you've seen done from somebody who's just like, my goal is by this age, I want $20,000 a month kicking off, or, to be honest, some of these FIRE people, what does that stand for again? It's like financially independent, retire early. I think that's what FIRE is.
Okay.
Some of those people only need $3,000 a month to live. I don't know. I don't know where the heck they're living. It's not California.
Right.
But for somebody like that, cause you touched on it too, and forgive me, I throw 5 things at you.
Yeah.
It's a different game plan, I think, than somebody who's like, I'm going to work till I'm 65. Then I probably need 20 years of runway. And if I make $6,500 a month, I'd like a $5,500 a month to retire on. Somebody who's like big dreams, big goals, do it relatively early. What kind of things have you seen? Maybe, an example or a story there.
I know I'm on your podcast and I'm not trying to blow smoke, but I was just talking about you in terms of being a big thinker, right? I was talking to a mutual acquaintance of ours, and I said that Matt Gougé guy, he knows how to think big, and there are a lot of people that think big, right? And I think the best way to look at people's financial picture is to say they have 3 boxes typically. They have their home run opportunity, right? Your enterprise as an entrepreneur, right? They have the aggressive dollars, which is, when they put their 401k dollars away or their retirement dollars away, that's cash related. And then there's their safe dollars, the bank money that's no risk, that sits there in cash, available for opportunities, right?
Mhm.
So someone who's thinking big like that needs to have kind of a big home run opportunity in front of them, right? Whether they work for someone that make 400 or 500 grand a year, whether they run a business like you do. I mean, they have to have that home run opportunity. Um, there was a thing I heard back in 2008. Some guy said at like one of the leadership or the investment conferences I went to, he goes, if you go to Forbes magazine and you look at all the wealthiest people that they list there, none of them say I got wealthy because of my financial advisor, right? They created something amazing and that's how they became financially independent. Now, what we do is kind of help sit down with them and say, how does that fit in your overall picture? And how can we make that so that we don't blow this great opportunity that you've been given,
Mhm.
right? I have a friend who just sold his second business. He's traveling in Greece right now, probably an expenses not, probably an expense worry-free situation,
Right.
right? I didn't do that. He sold this business. We graduated together. He's a great guy. He did this. But that money that he made from those businesses, he has to park them somewhere, typically with someone like us. But we didn't make anybody wealthy. But when people come to us with cash, we make sure it's preserved and taken care of and managed well versus, hey, let's find something else. But there are those people that you and I know that say, hey, I just got $10 million on a sale of a business. Let's roll into something else.
Right.
That's what a lot of these podcasters, that were investors in like Twitter or whatever else. They just
Yeah,
took
they
money.
had some exit somewhere. And so, what I'm hearing and for the, correct me if I'm wrong, is like, you're going to help create a foundation and
Mhm.
some safety, right?
Right.
While some of these, big dreamers go
Right.
out there and try to hit home run shots. And,
Right.
if I don't own a piece of the Sacramento Kings, or if U Mortgage doesn't become a $1 billion company, then, I'll at least have the financial stability of, some of the stuff that I parked, some of the investment vehicles that I've got, as, somewhat of a backup plan, maybe.
Well, people's financial, as life changes, right? I mean, everybody has like these colossal life changes. I did not know that 2024 was going to give me the life changes it's given me. So we pivot, right?
Mhm.
And I've spent this year not as a financial advisor, but as a manager of my dad's rentals, right? I'm in the real estate business all of a sudden.
Yeah.
And I've got a younger brother who lives in the Bay Area who his idea of real estate is way different than mine because he's around houses that are $7 and $8 million. So I did not know I was be spending my time that way, right? And I still focus on my financial planning business, and my clients are still important. They put food on my table. But if I'm using my life as kind of kind of a model for what's going on in life, everybody goes through these changes, which is why I always tell people, let's check in every year.
Yeah.
Let's check in every year, see what's changed in your life. Divorces are a part of life. Death of a family is a part of life. I've been dealing with all of it this year, and it's been coming at me. And suddenly, the things that I thought were important at 21 when I got into this business are dramatically different
Yeah.
than what I've got now, right? College education planning is a big deal now.
Right.
There were people that said, absolutely going to give my kids the opportunity to go to college. That's not what I hear anymore. People are veering away from that. Now we're here to help if it's important and to fund college. My kids, I don't know what they're going to do for college.
Yeah. You brought it up earlier and then it got my head spinning. So I got to
Yeah.
ask you, what are those college accounts called?
529 plans.
529s.
Yeah.
So I've got one for both boys.
Yep.
Ryan, if he ever listens to this, has said a lot,
Ryan, listen to your dad.
Well, yeah, he's 15 years old, so he knows everything. Doesn't need any advice from mom and dad, but college isn't part of his plan.
Right.
As of now. Who knows?
Right, sure.
You get older, you mature, maybe, you'll
Right.
think about some of the benefits that, meeting a great network,
Right.
And trying to figure out what your passions are. What can be done? This is a selfish question on my behalf, but what can be done with those 529 funds? Because I've heard different things. Oh, you can use it on trade school. You can use it there. But if Ryan and Ethan both have those accounts set up, they don't end up using it. They don't even know they have them, to be honest. So if you're listening, Ryan, don't try to get access to this. Let's use for the right stuff. What else can you do with those 529 funds?
Here are your selfish answers to all that. I have 529 plans that are going to go unused probably.
Uh-huh.
Right. I have 529 plans for both my kids. I might just keep them for grandchildren. Right. I'm the owner of those plans. So I keep them for grandchildren. If my son or daughter do want to go to a trade school, I can use it for those. I mean, there's an approved list of trade schools we can use. Or I can give them to my nieces and nephews. I mean, my sister-in-law, we haven't had the best relationship, but one thing I respect about her, she's a type A who makes her kids get to work. And so, they don't need my help, but if I wanted to give it to grandchildren, nieces and nephews, I can.
So you can transfer it to other family members.
Nieces and nephews and grandchildren for sure.
God, you could make it like a contest. Be like, in this family, whoever's
Oh, don't you worry.
whoever's, I would have them write essays, man. I'd have them qualify for it.
Well, I have a niece, that I love dearly that she could use also all the help she can get. And I've told my kids, listen, we may give what should go to you guys to her just to give her a little bit of help, and I could take care of you guys later. I mean, this is a way to be charitable too.
Yeah. Yeah.
Right? If you're so lucky and blessed that your hard work has paid off, like you've done with your family and I've done with mine, that you can kind of pay it forward. A 529 plan is a good way to do it.
Yeah, that's pretty cool to think about. Where and is there? Do you know any limit? If you're like, hey, I've got X amount in this, can I throw 5,000 to this nephew? 5,
yeah, I mean, this is all, and this is where it gets murky. When clients come to us and say, I have a distribution to take out for college, that's actually between them and their tax professional.
Right. You just have to show it's a qualifying,
right.
But
with their tax professional.
Right.
It's the tax person that's going to say, hey, that was a qualified expense versus, they could have gone to Tahoe.
Right.
But I don't know. That's not our world.
Okay. Yeah. Because like some of those other, accounts, if you take it out and it's not for that, then you're going to have a tax bill and a penalty for pulling it out.
Yeah.
Awesome, man. So we talked about some people who are maybe brand new, early, thinking about retiring. In today's environment, what advice are you giving to people who are maybe closer? Because I want to hear something too, because I think people are paying attention to health. I think that there's medical advancement. I think people are going to live longer. So if somebody's in your office and they're like, listen, Jim, I'm 65. I still feel young and good, but I'm probably going to be done working in 3 years. If they might have 90-year lifespan, what type of conversations are you having there?
So that's a great question, because I have an 83-year-old father who, if he didn't get it in his own way, probably has another 10 years. So here's my thinking on that. We are living longer. I don't know if I'm going to retire, right? Like, I love my office. I love the people in my office. There's guys that are 78 years old that still come in the office. They don't need the money, right? So retirement looks different for everybody. Retirement used to be, when pensions were prevalent, retirement used to be, go away, here's your monthly check, it's going to keep up with inflation, and have a good one. But I have clients that are 75 years old that still are sharp between the ears, that companies are paying 10 grand a month for their brain.
For consulting type stuff. Yeah.
Yeah. I mean, they show up to work, they've got this great energy, they're 75 years old, and they're getting paid 120 grand a year to just kind of be smart. And so I think that when we get there, I'll tell you one thing, that there's an advisor out of Colorado that said this. Do you know that the statistic is people are more likely to die descending Everest than ascending Everest?
Wow.
So people are more likely to die coming down from Everest than they are trying to summit Everest, right?
Yeah.
So people can make mistakes on the ascension to retirement, but where you can really fumble is on the back end, and that's in distribution planning. And so good news is every financial person has access to software that kind of measures that. There's an analysis that you run where you give the program this amount of money, and you say, given thousands of models or thousands of simulations, how likely is this money going to be intact in 20 years?
Right.
And you do that every year until the person passes away. I think the best thing to do is what we all need to do, and the math kind of proves it, is we want to extend our working life and shorten our retirement life. Now, I realize people want to retire, but you better do something pretty amazing in terms of saving well, and or selling a business, and or getting a business that creates an income stream for you.
Right.
Again, I don't know that I'll need money when I'm 70 because my business will kick off income or my rentals or Social Security, et cetera. But when you come to us, we're gathering all that information and saying, can you stop working if you want? Yeah.
Right. Yeah. I mean, it seems like a scary proposition. And I think that like it's prevalent and it's scary to think about.
Yeah.
Being 82 years old, money's gone.
Right.
10 years of life left. And what the heck do you do? It's sad to think about. And,
Yeah.
everybody's life experience is different. Maybe it was an event that happened or something or poor planning. You mentioned technology and using that to project, based on 1,000 models, you draw this much per year.
Right.
This is going to last you at least 30 years. What role does technology play? And then I want to rewind time to the beginning of your career and tell me what's changed.
Oh God.
So first technology of today, what kind of things are you using, besides those models that people plug into to?
So this goes back to, a doctor who's sitting down with their patient. They have all these machines, right? I guarantee those doctors do not know how those machines work. In fact, my clients who sell those machines are the ones that have to educate the doctors on how those things work. Now, the doctor then applies that information from the machine to his or her care of the patient. We're no different. We know that we don't know how the software calculates this stuff, but we know what it means when the output comes out. So if you sit there, Matt, and you come to me, you're like, Jim, here's $3 million and I'm 61 years old and I don't want to have to tap into this. Okay. So if we're going to leave it intact, where are your other sources of income going to come in? Right. Or you say, I want to make sure that in 20 years, there's still 2 million left. Okay. So we do a like kind of a survivor model for the $1 million, right? How much can we take out this $1 million where it's still intact after 20 years? And again,
so you could essentially plug in anything. You can be like, I only need to have this much left. It's a funny conversation to have. And I think to your point, like this stuff changes all the time.
Right.
One day you're like, oh my gosh, I'm going to leave a legacy. These people are going to be set up.
Right.
The next day you're like, you know what? These, kids of mine need to learn how to create something on their own. So let's leave them zero and have them start from scratch and build something they're proud of on their own. And then the next week it changes again, right?
This is going to make me sound like a monster or entertain your audience. But I was such a good son to my dad. And I'm not saying I'm a great son, but I was a good son in the sense that when I was young, I listened to everything he said. And now I have my own kids and maybe I'm just a bad father. I was a great son, but a bad father. But I don't feel like my kids listen to me at all. Well, the conversation's very different. Like when my dad says, this is for you and this is for your brother and this is how I want you guys taken care of, I feel like I earned it by being a good son. I'm not saying my kids are bad kids, but they weren't as respectful along the way in the life lessons that I learned. Now, hopefully they don't totally blow me off or this starts to sink in, but I think just kids are different these days. And so it's very difficult to kind of, like you said, you don't want to spoil them, right? But I very much understand why Warren Buffett says you guys get 10 million each and the rest goes to charity, right? What do you need $1 billion for? And I'm not trying to sound like a weirdo, but what do you need $1 billion for that you didn't earn?
Right.
It'll ruin you.
Yeah. Yeah. And that's, I feel like it might be stealing and subject to change. About 44 years old and next year I might have a different view and 10 years from now I might have a different view. But I know that the most fulfilling things in life are things that you had to work for and had to earn and like to rob a kid of that and just be like, you know what? You're just going to wake up when you're 25 or 30 or 35 and just have an inheritance left to you. Like, that's truly robbing that gift that is like, going out there and doing something on your own. So,
Joe Montana actually has his kids in working with him on their, they have a hedge fund they run. And Joe Montana works with his kids in San Francisco and they're working on it together. Right. I've told my kids, if you guys want to take over my business, you can, because somebody has to succeed me and take over my clients and work with them. And a lot of advisors do that. My daughter's response to that was, well, you're always stressed out. I go, success is stressful, Katie.
Yeah, it ain't easy, but it's worth it. Yeah, it's great. And I think that, just to put a bow on all that stuff, it's great because everybody's got different plans and goals and different family dynamics. Yeah. And I truly think that, you know, you shouldn't beat yourself up as a bad dad.
Well,
My hope, this
yeah.
is my hope.
Yeah.
My kids' brains haven't fully developed yet. And so
Right.
when my son at 15 tells me, I know everything, stop talking to me, I'm smarter than you.
Right.
I just, you know, at 25 or 30 or whenever the men's
25 is the
brain develops, he's going to wake up and go, you know what? Mom
Six
and
more
Dad-
years. Six
Mom-
more years.
Mom and dad were actually pretty smart. They said some smart stuff.
Yeah.
People love stories, man.
Yeah.
I want to end this with some stories, some success stories, some things that you've seen, because you've been doing it for decades.
Yeah.
And so I'm sure that you've seen wins and failures. Failures aren't as fun of stories. So yeah, what have you seen? I mean, your practice where you're like, man, that really worked out great.
So I'll kind of like touch on a lot of things, right? So I started in 1994 as an intern while I'm in college, and then I do such a good job as an intern selling life insurance policies that they said, "Would you like to go full time?" And me and my best friend at the time were like, "We've got to crush it," and so we joined this company and think sky's the limit, right? We are going to go through the moon, right? And then I got kind of lazy and didn't start running my business until a little bit later than that. But at the same time, I was also 22,
Right.
right? So I had time to kind of fix that. Then 2000 hits, and from 2000 to 2006, I'm killing it because I'm working with loan officers who are selling all these crazy loans, right? And so next thing you know, 2002 to 2006, I'm flying.
Right.
And I thought, oh my God, what are we gonna do now? So I have our first son in 2005, tell my wife she could stay home. And I'm thinking, we're gonna be just fine. No. Then 90% of my clients go bankrupt between the years 07 and 08. And I swear, I mean, it got to the point I've never thought about leaving my company or the industry, but it got to the point that my wife put together a resume for me to go work anywhere. Right. I don't know how to put together a resume because I started out of college into where I'm at now. And I don't know how to put together a resume. I didn't, but she did because she looked for a job here and there. So she puts together a resume and starts sending it out. I go, what are we doing? So, you know, I grind through and then I get my 3 credentials and I get a bunch of gray hair on my face and, you know, things turn around. But those years, I couldn't have felt like a bigger loser. Honest to God, like just having all these clients just go bankrupt at the same time, you just start kicking yourself and look at yourself in the mirror. Like, how did I get here? I think the success is, so those are, I mean, you can always look back and go, I should have done things differently, but you can't.
Right.
But the successes now are when, you know, we had a client pass away. They had just retired. Their plan was to live in Greece. They had all the money they needed. And then literally like 3 months after they retired, I get a Zoom call, not a Zoom. Yeah, we scheduled a Zoom call to like a video call.
Mm-hmm.
And I see the client laying in bed with their spouse and they said, stage 4. And it broke my heart. And then that was a month later that this person had passed away. So the spouse is in my office in tears and I'm crying too. The spouse and I are now good friends, and when they leave the office, there's a hug and an "I love you." So it's really weird how you become, you know, the successes for me are these relationships that I've built. You know, I had my 50th birthday last year, and one of our mutual acquaintances that I invited to my party showed up, and they said, well, you don't need a bunch. They were under the impression that I needed people that were there because they weren't sure who would show up.
Mm-hmm.
And then she just looks around and goes, you have a lot of people here. And through this business, I'm able to affect a lot of lives. And through this business, I'm able to do my charitable stuff with Junior Achievement, do my work with like, you know, East Sacramento Little League. Like, because I'm self-employed, there's not a boss telling me, don't do this, don't do that. And as long as our clients are taken care of, I get to do these other charitable things. And then you build those relationships. And of course, then they come back to you and they say, hey, Jim, you did such a great job coaching my kid. Can you handle my money too?
Mm-hmm.
So it just kind of comes, we have a mutual friend that talks about being a holistic person, right? Yeah. I'm not so narrow focused that I'm just a business owner. Mm-hmm. No, I'm a dad. I'm a husband. I'm a Little League coach. I'm a Little League board member. I'm a Junior Achievement board member. I'm a person in the community that's trying to leave a good legacy for whatever that's worth, right? And so those are the successes. I think, 20 years of being inside people's lives, you really get in deep with them and you know everything about their family. And then when they lose a parent or they lose a spouse or they get a divorce or whatever happens, you're the person they call. And that always makes me feel good when a client reaches out to me and said, "Hey, Jim, remember when you talked about this thing you were experiencing with your wife? Can we talk about what's going on in my life?" And I love that lunch.
Yeah.
I don't want them to go through that, but I mean, I love that they thought Jim is the guy that I can count on to have that conversation with. So it goes back to being a therapist too.
Yeah. Yeah.
You're in their lives from a financial standpoint. So those are my wins. Any endeavor. This is what I was telling Katie, my daughter. Life is going to be hard, and it's going to be stressful, whether you're successful or not successful. So stress out chasing success, not stress out because you have not a nickel to rub together.
Right.
And so I tell my niece that, I tell my son that, I tell the kids at Junior Achievement that, like, don't look at a successful person and think, oh, they have it easy. Most of my successful clients are always stressed out too,
Right.
because they're trying to build something bigger than themselves. Like you. I mean, Matt, you and I have talked so many times, you're living the dream, but I don't think that you're not having your challenges too.
Oh, stomach issues with all the stress, which to your point, and not to interrupt,
Yeah,
but
no.
like, I'm so aligned with everything you're saying, where what a blessing to have an impact. When somebody's, naked financially with you, like
Right.
you form relationships, and just like you get those calls, I love it when someone calls me and goes, you know what, this isn't really mortgage related, but
Right.
I'd love your advice on
Right.
this. Unfortunately, in 2023 and 24, it seems like a lot of the real estate transactions are happening
Mhm.
because, divorce, death, and things that, aren't easy conversations to have. But when somebody brings you that and says, you're the person I trust
Mhm.
to give me some good advice on this, there's something really special about that,
Right.
that I really, I can tell what effect it has on you.
Yeah.
And it has that same effect on me, where I'm like, wow, this is an honor to have somebody trust me enough, because they know, given the track record,
Mhm.
I'm going to give them good advice. I'm going to give them unbiased advice. And many times, I'm sure for you too, that it's not even business related. It's nothing to do about opening a new account or
right.
investing assets. It's just
Right.
like, I'd love your advice because, about me and my finances and my personal life, and I need, some help here. So, that's
When
awesome.
people come to me and they go, why should you be my financial advisor? I could think of like 1,000 better financial advisors if you want to go that route. But are you going to take my phone call when I reach out to, actually, it was a real estate guy. I can't remember his name. He was with one of my best clients. And he said, I'm going to tell these people when I do these marketing pieces that you're the best financial advisor. I said, please don't say that. Right. Now, that's not to say that I'm not good at what I do. It's to say that, well, if I'm with you, Matt, I will be the best person for you because I care about you. We've been through a lot together, and I will go to war for you and with you in the trenches, getting dirty.
Yeah.
Right. Now, I have some clients who have done some disrespectful things in their lives that I'm not that enthusiastic about helping. I will, but they're not going to get the best version of me as the person who has let me in the way I'm talking about some of these clients. Like, one of my clients called me and said, it's because of you that we started going to marital counseling. And because we started going to marital counseling, we had the best marriage ever. Because I was candid about my own, visits to a marital counselor. And because we didn't go because we were trying to save a marriage at the time we did it. We went because we wanted to do it as a preventative measure, the same way that clients come to me when they're going to be fine financially, just to make sure everything's going to be okay.
Right.
And so, yeah, we both share that in common, where we appreciate the human part of our business because it's where we really leave an impact, right? I mean, I don't want someone to tell anybody, oh, Jim makes me a lot of money because his returns are blah, 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 blah.
Yeah.
Please. The market's going to do what the market's going to do. We do good work, but we're going to steward you through these changes. But, if 2008 happens, there's nothing I can do to save you from it.
Right.
And if these great markets happen, don't give me credit. I mean, the market's great. I mean, I'll make sure you're fine, but I think the personal relationship is what's important to me.
Yeah. Yeah. Relationships matter in all businesses. The older I get and the wiser I think I get, the more I realize like relationships are everything in all businesses. And so I know the answer to the question. I think this discussion has proved this, But, for somebody who says like real estate agents are going away, financial advisors are going away, AI is going to replace that. Like you can't replace the human element,
Okay.
right? And so I guess what's your quick rebuttal on, somebody saying, "Oh no, I can just use technology. I can do it myself. I can log on and open up, XYZ investment account and just do it on my own."
I fancy myself a potential stand-up comedian, right?
Yeah.
Right. Let's do AI medicine,
Yeah.
right? Let's go to an AI doctor. Let's go to a virtual doctor who's a caricature, or what do they call it, an avatar?
Mm-hmm.
Let's go to an avatar when I've got this shooting pain in my side and the robot in front of me says, have we called enough 800 numbers to say, please press 1 for this?
But just let me talk to a human.
Right, right. So really, we're going to look at we're going to do this with our financial planning, with buying a home. I mean, the reason why we chose our real estate agent in 2004, shout out to Connie Peel, is because she made us feel like we were her children, right? She made us feel like we were so loved. What computer, what AI is going to do that? Right? And by the way, our ability to counsel our clients comes from 30 years of history, anecdotes that actually, if you're going through something, you're like, Jim, this is really a pain point. Well, guess what? If I take 30 years of my history in this career, I might say, Matt, somebody else went through that too. And you know that person. And guess what? This is how they got out of it.
Mm-hmm.
Oh yeah, AI's into that. Let's go to AI doctors. And people don't even do AI car shopping.
Right.
They need somebody to just sit there and negotiate the car, right? So why are we, I heard a great thing from one of these advisors that was at Northwestern Mutual like 30 years ago. And this guy said, we got to put a value on what we do, right? The human element is not to be measured. It's immeasurable. Right. So let's AI, come on.
Yeah. Yeah.
I don't mean to be sarcastic, but let's go to an AI doctor.
It's great. Yeah. Yeah. I love that because, you're always going to have people like, oh, I don't need anybody. Computers can do all of it for me. And, in almost any industry, you'll see where it's like, oh yeah, you saved 1%, but it cost you an extra 5. Net, you lost 4% on whatever you thought you were saving by going straight to the source and DIY.
There was a study, DIY. Yeah. Do it yourself. Yeah. Do you know there's a study that says that the market will do what the market does, but if the market did 10%, the individual investor without an advisor does 3%.
Wow.
Right? So that's to say that people's emotions get the best of them. Trust me, I was a triage unit during March of 2020 when everybody's accounts went down 30%. It was like a phone call every day. And if I didn't talk a few of those people off the ledge, they would have had, I had one client, love this guy. He goes, Jim, I gave you 500,000 and now it's down to 400. I guess it's down to 350. I said, but the advice is gonna be the same. By the end of the year, the money comes back and then some. And there's a hug and a thank you at the end of the year saying, thanks for saving me from myself.
Right. Left to his own vices, sells out at 350 versus hold tight.
Right.
End with 600.
Exactly.
Right.
Exactly. And so, the good people that you deal with that understand your value, those are those wins, right? Now, if they listen to you and still don't value you, you still like, all right, well, here to help you still. But, if you're working with the right advisor anyway, they're a fiduciary and they make sure that when they win, you win. And when you win, they win. And they're giving you advice and give to their own family that they love. So, I don't think that AI is taking that job for me.
I don't think so either.
Yeah.
All right. Parting words. How do people reach you if you want to be reached?
You can find me online. It just, you look up Jim Kiniris or Demetrius Kiniris and you'll see all my whatevers. I mean, I hope my biggest thing, Matt, is I hope this helps. I hope this helps anybody. I mean, I was just talking to somebody today about junior achievement and, it's important that kids as young as possible learn financial literacy and workforce readiness because then they become my bad clients if they don't.
Right. And quite honestly, while we're just a quick side note on that, financial literacy is not commonly taught at any substantial level to where, we're talking about kids and your kids should understand the basics. I'm talking to 35-year-olds. I'm talking to 50-year-olds
right.
that are, having the conversation about a mortgage And I'm just talking basic stuff like
Right.
budget and
Right.
what can you afford.
Right.
And I realized that this is like a serious issue. So I didn't mean to sidetrack there, but like,
No,
it's a problem.
it's a
right?
huge problem. I mean, the reason why I joined Junior Achievement is because I realized that we can't pick our parents. So here I get born to, 4'5" Dorothy Kiniris and 5'5" Peter Kiniris. Thank God for my 5'10" height, right? But I get born to these two who love their children in such an amazing way that I feel like I'm well adjusted, and my brother even more so, right? And then that I got to be the oldest son at my dad's deli, learning about, hey, if I buy this box of Snickers and I sell them for 50 cents, but the price per Snickers 24 cents, this is where, I mean, what fathers and parents, let alone the time that they have nowadays, because life's so chaotic. My dad had the freedom to pull me aside and say, Jimmy, at 8 years old, here's how we pay our bills,
Mhm.
right? Well, some kids can't pick their parents and they don't end up with the best kind of parents. So maybe if I go into these, these classrooms when they're 5th grade, 6th grade, maybe I can share that lesson, right? And then they go see a financial advisor and they've kind of got a good head on their shoulders already. Funny, my sister-in-law calls me and she goes, hey, your nephew's got $4,000. And I said, you know what? Your nephew and niece are not even listening to me. What are we talking about here? But I think that when they hear it from someone who's not their father,
Mm.
then it kind of hammers it home, right? Maybe if somebody else goes into my kid's school and teaches them financial literacy, then maybe Katie's.
Same thing dad said, but somebody else says it and all of a sudden it hits.
But then she goes, oh my God, my dad wasn't stupid,
Mhm.
right? Because somebody else did the same exact thing that my dad's been beating me up over. So yeah, I didn't. If people want to reach out to me, I'm happy to help anybody. I'm not running a charity, but I believe it's good to help
Mhm.
when people need help.
Right.
And so they can find me online, last name Kiniris, first name Jim or Demetrius, my legal name. And you can find me there and I'm happy to help. I don't keep my information private, but yeah, more importantly, I wanted to do this from a standpoint of, I love listening to your podcast, Matt. You do a great job. For someone who's not a professional podcaster, you're one of my favorites. So I'm glad I'm here. And
This
I'm,
was
I'm
fun,
honored.
man.
Yeah, I'm honored. Man.
I appreciate it. Thanks, buddy.
Yeah.
All right.